Far West Rand gold recoveries, the update, and straight into 18. Feel free to admire that picture just for a little bit. The quality of the infrastructure that we acquired from Sibanye is very encouraging. It's enabling us to get into this very, very quickly, to get into production very, very quickly. So the transaction was completed on the 1st of August 2018. At the time, we'd already secured orders for some of the long lead items in order to enable us to hit the ground running and to have this thing up and running by the second half of the current financial year. And we are very, very pleased with this transaction. We saw that it's taken our gold reserves to close to 6 million ounces of gold reserves on surface, accessible by way of our mining process of using high-pressure water, capable of being linked up with existing infrastructure. I think what makes this an exciting project is if you looked at the combination of assets and maybe some of the previous models, it was going to be tough for us to do this and to take full advantage of this reserve if we had to wait until after a very large plant had been built and a very large tailings deposition facility had been built. And that's very much part of the future strategy for this project. We do want to, as we want to do with Ergo, we want to optimally exploit our ore body. We want to see if we can mine all of these dumps and clean up that entire area and move it all to a well-managed deposition facility out at Withok and the Brakpan tailings dam, rather. So we want to do exactly the same thing here, but to take the sort of dilution that we did in order to acquire this and then to have to wait for 3-4 years maybe of further capitalization and construction, commissioning, and so forth and so forth, I think that was going to weigh heavy on DRD and the DRDGold story, which is a cash flow story and a dividend-paying story. So the fact that we were able to acquire these plants, the Driefontein plants, as part of the parcel of assets, the fact that we got a deposition facility in the number 4 dam, and it's really like the Springbok scrum in the old days. You could cover them with a blanket; they're so close together. It's a very nicely concentrated footprint here, and this enabling us to, for relatively modest capex, get the thing up and running in such a way that it provides additional optionality. So we're not locking ourselves into one specific model here, and to start with production in the first quarter of the new calendar year. So we're very excited about this, and our objective, our target is to not bring about a dilution of the earnings from Ergo, so that the cash flows coming out of the revenues coming out of this project is such that it fully makes up the 38% dilution of Ergo earnings, and not just make it up, but in fact contribute towards that, so that the net aggregate value add per capita is in fact positive, and the indications are that it would be. So for us, this is very much a step change.
Martin Creamer from Mining Weekly Online. Niél, could you please tell me what the life of your company is now, given the new Far West Gold Recoveries project?
There are different models. So the West Rand, the number 3 and number 5 dam, which we refer to as the first phase of the Far West Rand operations, that has a standalone life of 12 years. But obviously we've undertaken to also look at the incorporation of the whole of that footprint into a much larger initiative, and that will be the subject matter of a 2-year study from when we start producing. And then it could be substantially longer. If my memory serves me correct, then I think there's a 15-year model, and there's also a 18 or 20-year model. So there are different iterations, 12, 15, and 20.
And are you looking at any other assets on the West Rand? Is there anything else that you could incorporate?
The only thing that we can look at now at this stage is what we own, what we bought. But this is not an island. Obviously, there are lots and lots of dumps around the Far West operations footprint, and many of those are attractive dumps. that whole Western Deep Levels belt, the Driefontein Kloof belt, those were spectacularly rich reefs. And the gold content in those tailings dams the gold content's good in those tailings dams. So we certainly we will. I mean, they'll feel comfortable in our portfolio. There's no doubt about that. And of course, if you could add a few 100 million tons, it just makes your model for a larger plant so much more, so much easier. That hurdle rate drops. So the opportunity will certainly present itself. We don't want to. One of our key filters, one of our key strategic considerations when we look at these things, and once again, it might be overly conservative, but it served us well. It served us well over the last 10, 12 years, is that we started the surface story. We started building the surface story, expanding on the surface story with net cash flow as a core element of the story. And we're very conscious of net cash flow per capita, net cash flow per share. So the earnings are earnings. These fair value adjustments, they could confuse you into believing that a company is financially really strong. And I think we were all caught unawares by something similar to that a few months ago when we saw a major corporate collapse in South Africa. Or they could give you the impression that maybe something is not as strong when in fact it is very robust and strong, which is probably where our results fall in this year. But net cash flow per share, it's money in your pocket. It's what you can use to buy bread and milk with. You can't buy mills with a fair value adjustment or a deferred whatever you want to call it. Although we have long conversations about it, but cash is something that you could apply to build infrastructure, to build a capital base. And so what we don't want to do is this is not a runaway growth story where deal momentum is the thing that's going to make this thing attractive. And I think we will want to stay committed to our core philosophy of real value build, actual value, and that there's underlying value that supports the business. So yes, there will be plenty of opportunities, I think, to incorporate, and we'll look at those with an open mind, and we will want to participate with those that I think share our value system and our commitment to dealing with these things responsibly. And we've made mistakes in the past. So probably never sell another mine. When I have a say in the matter, but we would want to maybe incorporate assets going forward and collaborate with people who share our value system, and that opportunity will certainly be there. But it would have to be done in such a way that we don't undermine the per capita value add philosophy that we have. So we don't want to be burning ounces on the one end because we're just acquiring ounces more rapidly on the other end. It's like trying to sprint a marathon. You're going to run out at some stage. Does that answer your question, Martin?
Yes, it does. And then just finally, could you just give us a word on the yield that you'll have on the West Rand versus the yield you've got on the East Rand?
So it's a higher grade. The initial phase does have a higher head grade. So we do anticipate higher yields. I think it's about 25% higher are the initial indications. But then again, this is tailings, and you'll know exactly how much you're going to make when you actually see that gold bar coming out of the smelter.